Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we continued our free forex trading course with a look at the British pound. In today's lesson we're going to continue our discussion of the major currencies of the world with a look at the fifth most actively traded currency in the world, the Swiss franc. So let's get started.
Switzerland is one of the richest countries in the world, and while its economic policies and practices largely conform with EU standards, the country's population rejected accession negotiations with the EU in March of 2001. So, at least for the foreseeable future, the Swiss franc is expected to remain one of the world's most actively traded currencies, with two dominating features that are important to us as forex traders. Although this status has started to wane somewhat in recent years, the Swiss franc has historically been considered one of the world's primary safe haven currencies, which means that money flows into the Swiss franc during times of economic or geopolitical uncertainty. The primary reasons why this is the case are, number one, the country's ability to remain out of global conflicts, a reputation it solidified by remaining neutral during both world wars. Number two, its economic stability and relatively low inflation rates. Number three is the fact that up until recently, the currency was 40% backed by gold. Number four is its reputation for high-quality financial institutions and banking secrecy. As you can see from this chart, traders who anticipated the Swiss franc would strengthen as a result of its state safe haven status could have participated in the 1,251 pip move lower in dollar Swiss in the 10 days following the September 11, 2001 attacks. As another example of the Swiss franc displaying its safe haven tendencies, traders who anticipated that the Swiss franc would strengthen as a result of the U.S. invasion of Iraq could have participated in another 1,200 plus pip move in the dollar Swiss in the 2 months following the invasion. In 2005, the Swiss government sold the nation's vast gold inventory, and as a result, the currency is no longer backed by gold. Some argue that because of this, the Swiss franc has lost much of its safe haven status, something that there will surely be more tests of in the years to come. The second thing that is important for traders to understand about the Swiss franc is its strong correlation with the euro. As the Swiss franc is quoted on the opposing side of the dollar when compared with the euro, this means that the dollar Swiss currency pair has a strong negative correlation with the euro US dollar currency pair, as you can see from this chart. As you can see here, a chart of the two currency pairs shows the strong negative correlation of over 90% between the two currency pairs, resulting from the strong economic ties between Switzerland and the European Union. The first reason this is important for traders to understand is so they can take it into account when considering trades in both currency pairs. As the two currency pairs have such a high negative correlation, there is a very good possibility that a trader's technical analysis will show a buy signal in the euro dollar, while at the same time showing a sell signal in the dollar Swiss, or vice versa. If this trader happened to be blind to the negative correlation we have just outlined, he or she may think they are putting on two completely different trades. As we have just shown, however, what this trader would actually be doing is doubling their exposure to the move they were trying to capture. Conversely, if a trader were to trade these pairs in the same direction, then they would effectively be reducing the potency of both trades, as the negative correlation between the two currency pairs will act to offset the gains or losses that result on each trade. As the Swiss franc is nowhere near as liquid as the euro, on an intraday basis, it is important to be aware that this negative correlation can break down somewhat. Lastly, should the Swiss political and/or economic environment, especially monetary policy, start to substantially diverge from that of the Eurozone, you could see a breakdown of this negative correlation on the longer time frames as well. As with the other currency pairs we are studying, FX Words has a great page outlining the details of all the important economic indicators for the franc, a link to which you can find below this video. The global calendar at dailyfx.com also gives you the release dates and real-time analysis of those releases, so you can be aware of them and follow the results in real time there as well. That's our lesson for today. In our next lesson, we'll begin a series on the commodity currencies, starting with the Canadian dollar. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comments section below. And good luck with your trading.